Hello everyone and welcome to Moementum channel. My name is Mo, and in this video we're going to talk about the top exchange traded funds that are in the domain of autonomous electric cars, electric vehicles. As you know, that's an area where there is a lot of growth and demand on it, and there's growing number of interest from investors, given the fact that there's going to be huge investments by various companies and businesses and governments in the clean energy sector. There's a lot of potential that comes with electric vehicles, autonomous cars, and as a result of that, it is wise for us to be aware of what are some of those key exchange traded funds active in this domain that you can invest in and potentially consider to get into. All right, so the first ETF that we're going to take a look at is one with ticker symbol DRIV, or Global X Autonomous and Electric Vehicles ETF. And this ETF has an expense ratio of 0.68%. That's an important number in terms of fee to be aware of. And if you look at the amount of assets under management, it has over $840 million assets under management for this ETF. Now, moving on, let us take a look in terms of the price to book ratio, which is the weighted average ratio of prices of a fund's stock to the book value of underlying equity. Of course, the lower the number, the better. Here, the price to book ratio is 2.72. This fund also does pay a distribution or some sort of similar to dividend, and it is sitting at a very low number of only 0.26%. Now, keep in mind that many companies that are active in the autonomous car electric vehicles are not necessarily dividend paying, and a lot of them are growth stocks. As a result of that, you're not going to expect a huge distribution yield here. Nonetheless, you would hope to see a considerable amount of growth. Number of holdings that are included in this ETF, in terms of how many different securities are held within this ETF, is 75. And we're going to take a close look at it and see what those are. So from a geographic distribution, you see a large portion of it, about 68%, you get exposure to companies in the US, followed by Japan, Hong Kong, Germany, and Canada, and the top other 10 countries that you see here on the list. From a top 10 holdings in terms of companies, you see here companies such as Alphabet or Google, Intel, Microsoft, Nvidia, Apple, Toyota, Qualcomm, Micron, Tesla, and Cisco Systems. These top 10 companies account for approximately 29% of the holdings of this. As we talked about, there's overall 75 different holdings within this. Now, let us take a look at the return of this ETF over the past span of several time frames. Now, as we talked about, this ETF is fairly a newer one. In fact, it was incepted in 2018 on April 13th. And if you look at the return for this one, you notice that the year-to-date return is showing a 12.6% return. The 3 months return is also about 12.64%, given the fact that we are just about 3 months into the new year. The 1 month return, though, is showing a negative return of 1.64%. The 1 year return, though, is very solid return over the span of the past 1 year. It's showing 157% plus return for this ETF. That's pretty decent. All right, so with that, let us move to the second ETF that is active in this file. And this is one with ticker symbol HALE or HALE. This is for S&P Kensho Smart Mobility ETF. Similar type of review we want to do just so that we can compare them to each other. In terms of price to book ratio, this is a little bit higher in terms of the valuation and pricing, because it has a price to book ratio of 3.40. As we said, a lower number typically is more desirable. Distribution yield, here we are looking at 0.63%. Here we have only for 58 holdings for this ETF, but this ETF has also an expense ratio of 0.45%. And in terms of assets under management, it is smaller because it has $245 million assets under management. How much money has been poured into this ETF in terms of those investors buying this ETF. Now, in terms of the top 10 holdings, in terms of geographic distribution, again, United States is heavy weight here with 80%, followed by China, Japan, Canada, Hong Kong, and other countries that you see here. In fact, we don't have even 10 countries, so it's all scattered through these 9 countries that you see on the list. And top 10 holdings, if you're looking at the list here, you're looking at companies such as AG Eagle, Aerial Systems, Avis Budget, Blink Charging, Lyft, NIU Technologies, Plug Power, Tata Motors, General Motors, Ford, and Trimble. These are the top 10 holdings for this ETF, HALE. Now, in terms of the return, an impressive return of 1 year of 221% return. 3-year return is showing 30% return. Year-to-date return of 13.61%. 3 months return of, again, 13.61%. And 1 month return of negative 2.75% return. Now, keep in mind that all returns over 1 year are annualized. So that 3-year return was actually an annualized return of 30% per year over the span of the past 3 years. Okay, let us move on to the third ETF here that we're going to review and introduce to you. And this one is with ticker symbol VCAR, or Simplify Volt RoboCar Disruption and Tech ETF. This ETF, as you notice some details here, was incepted in December of 2020. So it's not actually been open for that long. It's actually a mere couple of months. In terms of assets under management, this is very new ETF. So that's why it only has $1.43 million assets under management. And the expense ratio is higher than the other ones that we've reviewed so far, with a 1.09% expense ratio. In terms of number of holdings, it has 200 different companies under its management. And in terms of forming this ETF, the return we talked about, it's not open that long. So you're looking at the negative 5.65% return over the past 1 month, negative 12% return over the past 3 months, and negative 12% over the, as well for year to date. This is probably one of the ETFs that perhaps I'm least interested in, just judging based on the higher expense ratio, as well as the newer ETF being established, as well as the fact that it has a lot higher whole number of holdings. And look at the price to book ratio as well. It seems that you're overpaying for it, because it has a price to book ratio of 8.51, which is much higher than the other ones we talked about. So I'm not that keenly interested in, and it's heavy emphasis on US companies. So if you're looking into diversification, perhaps this, at least you're not going to get much of it from a geographic diversification, because over 95 or close to 96% of the holdings within this ETF are from US companies. So keep that in mind. In terms of the top 10 holdings, it actually consists of Tesla, but also it consists of a number of other ETFs here. You can see Invesco QQQ Trust and Invesco NASDAQ. Let us move on to the fourth option to review. And this is the ETF called IDRV, or iShares Self-Driving EV and Tech ETF. This is quite an interesting one. There is that emphasis on the self-driving technology. And as you notice here, let us take a look at some of the costs associated with that. You notice that this ETF has an expense ratio of 0.47%. In terms of assets under management, we're looking at $330 million assets under management. In terms of price to book ratio, it is more modest at 2.41. The distribution yield is similar to some of the other ones that we looked at 0.64%, and it has 103 holdings under management. Now, let us take a look at the returns. So you notice the 1 month return is 1.52% positive, 3 months positive return of 8.33, year-to-date return is the same, and the 1 year return is 139% plus. That's quite decent to look at. Now, if you look at the holdings within this ETF, in terms of geographic distribution, about half or 53% of the holdings are from US, followed by exposure to Germany, Korea, Japan, China, and the other top 10, overall top 10 countries, as you see here. In terms of top 10 holdings, the highest weightage is with Intel, followed by Alphabet, Google, Samsung, Tesla, Toyota, Daimler, NVIDIA, General Motors, Apple, and Qualcomm. These are about 38 or 39% of the holdings within this ETF that we just reviewed. And if we move on, there is one bonus ETF that I want to bring to your attention, and this is one particular of interest for Canadian investors, is called CARS, or CARS. Remember, this is an ETF. Don't confuse this with the stock cars. So this is traded on Toronto Stock Exchange with ticker symbol CARS, and it is Evolve Automobile Innovation Index Fund. It's an index fund ETF. Now, if you look at the assets under management for cars, we are looking at $118 million Canadian. The last trading price for this ETF index was at $53.34. It is currently having also a target yield of 0.64%, which is very similar to many of the other ETFs that we saw earlier on. Let us also take a look at the some additional details. So keep in mind the management fee here is 0.40%, which seems to be lower than many of the other ETFs that we've looked at, potentially because this is an index fund ETF. As we talked about, it's index-based, and that typically results in a lower fee. The listing or inception date for it was in 2017. And if you look at the payments for the distribution in terms of the yield, it's actually on a monthly distribution. So you're almost getting a small portion in terms of dividend or distribution yield on a monthly basis. Let us take a closer look at the portfolio and the geographic allocation. Now, a large portion on US companies, about 47%, Germany, China, Britain, Japan, Canada, Netherlands, Switzerland, Ireland, Italy, France, Austria, and Sweden are the next top big company exposures here. And this is actually all the geographic allocations. That's all the companies that you're going to get. It's not just the top 10. In terms of the holdings, if you look at the top 10 holdings here, you're getting exposure to Microvision, Porsche, Volkswagen, NXP Semiconductors, Skyworks Solutions, Texas Instruments, Gentherm Inc., Fisker, NVIDIA, and Umbrella. If we look at overall holdings, though, keep in mind there's overall 44 holdings in this index ETF. Looking at the return, if you look at it, the 1 month return is showing 7.61%, 3 months return is showing 9.57%, 6 months return of 59.60%, a year-to-date return of 10.45% return, and the 1 year return is a massive 213.5% return. Keep that in mind in terms of the return for this index ETF. Now, if you look at also the distribution, you see that the last distribution per unit was about 1 cent. And so really depends how many shares you have. And as a result, you're hopefully going to get a larger amount of distribution. And these are all the distributions in the year 2020. And if you look at it in the past year, pretty much the amount of distribution has stayed the same at about 1 cent. If you look back at 2019, a very similar amount, 2018 as well, somewhat similar, though you got some additional payments, it looks like it, in the December of 2018. And if you look at 2017, that's the year that it started, other than the very first time in December that you got some special distribution, you've always received that monthly distribution of about 1 cent per share. So they've pretty much kept it very same over time, and it's not grown, but at least it is more geared towards the growth ETF for sure. This is one of all the ETFs that we've talked about. This is the one ETF that actually personally I'm invested in because in Canadian dollars, and I'm a Canadian investor. So definitely I save that way on the conversion fee. But all the ETFs that we talked about here are really good ETFs for you to consider. Keep that in mind as you would like to perhaps potentially consider getting exposure to this exciting field of autonomous cars and investing in electric vehicles and the clean energy sector as a result of that. So all of these are great companies and you might consider investing through these ETFs. Let me know if you have any of these ETFs in your own portfolio and what your thoughts and perspectives are about investing in clean energy, electric vehicles, and autonomous cars, and for that matter. Love to hear from you. If you enjoyed this video and gained something of value from it, please be sure to give this video a thumbs up. It really means a lot to us and helps the channel to grow. We definitely would like to have followers that are interested and excited about investing in the stock market, or those pursuing financial planning and financial education. With that, thank you so much guys for watching this video on Moementum channel. Here on Moementum, we post weekly various videos about topics related to investing, whether it's in the stock market, real estate, cryptocurrencies, and whatnot, as well as videos helpful for those interested in financial education. Thank you so much, guys, and I hope to see you next time.